Great. Paul, thanks for coming over. It was very far from your office.
Yeah, I had to walk like 15 minutes or something.
Right? And we have macarons, so it's like,
Yeah, and good coffee, so that's awesome. And I just remembers me like 2 years ago, I was actually like, how it was Morpho, we were having offices like a few floors above.
That's right.
It's always a pleasure to come into this office because it just reminds me of like the memories and stuff. But yeah, and you guys have come a long way now, like you're all over the building. That's exciting. I'm glad to be here. That's awesome.
Yeah, you're right. That's definitely where it all started. And it's funny that we are two French speaking in English together, which makes a lot of sense. But as you mentioned, you started here in the same place 2 years ago. Maybe can you a little bit introduce yourself and how it all started?
Yeah, for sure. So I'm Paul. I'm CEO of Morpho Labs. We built the Morpho protocol, which is the third largest lending and borrowing protocol on Ethereum. We have approximately $3 billion of liquidity that is deposited in the protocol and borrowed, etc. And we started 2.5 years ago, almost 3 years now. As we were students, I was studying distributed computing and consensus algorithms in Paris. And throughout my studies, met a bunch of people working on blockchain, and yeah, I decided to start Morpho at the time. And our first offices were like in this building, actually, at the top floor. And at the time, we were like 6 students, I think. And that was so good fun. So we used to meet there. And then we raised funds multiple times. And we got to build the first version of the protocol, which is called Morpho Optimizer, which was initially an optimization layer for AVN compound. So it was built on top of AVN compound and improving AVN compound's rates. We took this protocol to multiple billions of dollars of deposits, but very quickly we realized that we were too limited for the ambition of transforming lending and borrowing that exists in traditional finance with this model. So we decided to build a second protocol, which is called Morpho Blue. I guess we'll have the chance to talk about, which is completely independent from Aave and Compound, and that is its own permissionless and immutable lending and borrowing protocol on Ethereum, which today has more than 1 billion and 1.5 billion, I think, on its own of deposits. So yeah, that's the short pitch.
And before, I guess, we jump right into what Morpho is doing today. And Morpho Blue and all the other innovations that you brought to the space. It's the beginning of Morpho are actually very fun. Maybe can you first explain why you decided to become an entrepreneur? Or was it like something you had in mind for why? And yeah, how did you build a company at 20 years old you were back then?
Yeah, I think that's the age approximately. So I've always been interested in entrepreneurship. Before Morpho, like everybody usually they tell me, oh, you've been like lucky first venture 20 years old. Like, so, but what they don't know is the 4 years before that I've been trying to build companies and they all failed, right? So it's been 4 very dry years of trying to build something. So I've tried in real estate, I've tried in recruitment, I've tried in streaming industry as well. And every time it was like a failure. And so in my second year of engineering school, I decided to join this entrepreneurship passion with a second passion of mine, which was blockchain. And I had been studying blockchain for a while already at school, like I'm at university. And for the first time, I decided to bridge the two and say, okay, maybe I'm quite knowledgeable about blockchain, and I would like to do a project, so let's just like merge the two. And and from there I explored a bunch of different ideas, met with a bunch of extremely smart people, and this is how the first ideas came to be, and we iterated on a bunch of them, and eventually became Morpho. I would have to say though that before Morpho, I've always been repelled by the financial industry, and even wrote an article about this few months ago, where I used to hate finance, like as it is, and to me it felt like a very despicable industry for many reasons, and I came to understand why blockchain technology in general, what does it truly bring to the financial infrastructure? What are the real benefits? And understanding this, literally, few days after I understood this, I started working on a project that used blockchain and finance, right? So how can we use blockchain technology to truly make financial infrastructures public goods and enhance the current financial system, which has so many flaws currently. So yeah, that's the background story.
And yeah, you met with a couple of very smart scientists as well,
Right.
that also launched Mangrove, and you were in the same office back then. How did, I don't know, for example, Vincent Danos, that we know both well, helped you launch this venture?
Yeah, for sure. So I met with some kind of think tank. Like I joined some kind of think tank, but DeFi in the early days of Morpho. We're approximately like 6 different people. One of them was also Adrien Solom, who's still working part-time for Morpho today, Jean-Pierre, etc. So a bunch of brilliant scientists, and they had a bunch of different ideas. One of them was Mangrove, another book on chain. Another one was what they called at the time Salami Swap, which was basically Uniswap free before Uniswap free existed. And another project was around like how can we do peer-to-peer lending while taking advantage of the pooled lending structure without getting too much into the details. And that was the project I was the most interested in. And so I started chatting with Vincent and Adrian about it, and we iterated a lot. And those guys are crazy smart, and I just love talking and working with them. And over time, they just remain as advisors in the project. But initially, for sure, in the beginning, they listed like few of the interesting ideas that were core to the.
And that's also when you met your 3 other co-founders.
Exactly right. So the previous projects I had done, like the previous ventures I had tried, I was alone, and I think that was the main reason why I decided not to pursue them. Is just the journey is much more painful if you don't have friends to share it with, or if you don't have feedback loops and you're just on your own. You're very on your lane, and you don't have critical feedback. And so I decided to really spend some time to get the best people out there, right? And so what I did is I look at the different universities in Paris, and I just looked for the best possible students that were knowledgeable about blockchain. Established literally a list, and among them, the 4 smartest and people I really wanted to work with, and they were super friendly and smart, were my co-founders today. And so Vernon, Mathis, and Julian, we've been working together for 2.5 years now, and there's not a single day in 2.5 years where we did not exchange less than 10 messages, and it's been an absolute pleasure. And yeah, they're awesome.
And so you basically came to them.
Yeah, exactly right.
And you thought, okay, these guys are really, really smart, and okay,
I really did some kind of I don't want to say recruitment process, because it was really human, but I really got in touch with each of them differently, for different routes, and this is how we worked together. I knew I didn't want to do this on my own, and I wanted some people to share the journey with, essentially, and I think that was the right choice. I'm sure that was the right.
Yeah, it's so hard to build a company, so alone usually gets very hard. Yeah, you mentioned it. You never wanted to work in finance, and now you're working in DeFi. So I guess what's DeFi, how DeFi is changing the world of finance, and yeah, why do you like to work in DeFi and you wouldn't like to work in finance?
Right, that's a good question, and that's a question I've been asking myself for years before doing Morpho. And I think it really essentially comes down to three things. Like the financial industry as it is today is not efficient, it's not transparent, and it's not resilient, right? It's not open and not resilient. So not efficient because everything takes time. You have very high fees for the service that is produced, which is sometimes really ridiculous, right? Like the, like the financial infrastructures where operations are computed. So like when you want to do any sort of financial operation, at the end of the day, there is a variable in the server that gets updated. Well, this server is closed source, right? And is not open like a blockchain is closed, right? So it completely rigs the free market aspect of things where anyone can compete freely with their algorithms, with their strategy on one common infrastructure. And it introduces very large inefficiencies in the system in terms of like fees, but also in terms of like time for settlement. So that's the first thing, like efficiency. The second thing is obviously like, transparency and openness, right? Like, which is less obvious, to be frank, like in the beginning when you're like among the lucky ones, like us in France, where, we have a system where you have, reasonable access to financial services, but it's not the case for many people in the world, right? And so just being able to build primitives that are open and that can be much more easily accessed by anybody with internet connection in the world, the same way you access internet protocols, is really appealing for different reasons. And then finally, there is the resiliency aspect, right? Like once you've built like an open and efficient like system, usually you would want it to be fully secure and resilient and with no central authority capable of like manipulating it. Often efficiency comes down to, having one single protocol for a specific primitive, say for markets, for example, or for lending. But if you have only one entity doing all the financial transactions in the world, then it poses some questions, right? Like, what is this entity? What can they do? Can they change the record of transactions? Can they essentially steal your money? Who controls that entity? Is it the government? Is it the company? And really, this is what blockchain solves, like provides like guarantees that the market structure, the financial infrastructure, behaves as expected. And it's such a powerful primitive to build truly efficient, open, and resilient like system. So yeah, I guess that was the motivation, and coming to realize that we have, and I'll finish with this. I think it's a very important metric is in the world right now, we have 50,000 different banks and credit union. Yep. They all have their own servers, right? They all do the same thing at the end of the day. I'm a bit exaggerating, they do some risk management, blah, blah, blah. But, they all have those teams of DevOps engineers building the infrastructure. And then, they have their buildings, they have to hustle, etc. And 50,000 times they're going to do more or less the same operation. And we're transitioning from this situation where, the physical device rules and the 50,000 banks rules to a structure where the blockchain is where everything is settled, and you have one open algorithm, and the algorithm rules, not the software, not the hardware. And we can talk about this with like staking and what Kiln is doing, but really this software is king in DeFi and not the operator of the physical infrastructure. And this is such a powerful thing. Because now instead of having 50,000 times the same thing, you can guess that there is like a lot of inefficiencies. Now you have one open algorithm that's reused for the entire world.
Right. And is it, and then like very happy to understand as well what you built first, and then why you built Morpho Blue. But is it why you built Morpho Blue so that like this 50,000 banks are using vaults on the protocol?
Yeah, exactly right. So you nailed it. Like we of course are currently building DeFi protocols for DeFi users, but the ambition is much larger than this. Like we keep thinking and asking ourselves, how can we build a protocol that, is suited not only for the DeFi and crypto users today, but can truly extend to, fintechs or traditional finance. And that can actually power, and be the backbone infrastructure that's reused by all financial applications, right? And when you think about it this way, it just changes a lot on how you think about, mechanism design, protocol implementation, etc. I know we can talk about the competitive landscape in lending for that. But yeah, that was the initial motivation, was like this very ambitious North Star, which goes way beyond what we're doing today in DeFi, because DeFi today is frankly very, very, very small.
That's right.
And it's very small, and it's very endogenic. Like, it's the same very wealthy crypto users that made a bunch of money because they were earning crypto or DeFi funds, right? But frankly, that's, I would say, like, you don't have much use case outside of DeFi specific users themselves. And, there's a bunch of reasons for that, but it's probably another topic in itself.
So maybe can you explain what was the Morpho optimizer, the first product that you launched, and the second major protocol that you launched was Morpho Blue?
Sure. So Morpho started with a protocol called Morpho Optimizer, which was an optimization protocol on top of Aave and Compound. So Aave and Compound are lending and borrowing protocols. And we built a layer on top of those protocols that was, composing on top of their smart contract, where if you use this layer instead of Aave directly, you would get better rates than Aave, while getting, the same liquidity, the same risk parameters, etc., etc. And, just to give like the brief intuition on how it works, on Aave, you have a large spread between the lending rate and the borrowing rate. And on Morpho, essentially, we, would map users. So let's say lending rate was at 1% and borrowing rate was at 3%. On Morpho, you would get the mid rate, right? Which is 2%. And so lenders and borrowers would get a better deal. And if there is no one to match with peer-to-peer, they would fall back to the Aave protocol. And that was really for us a way to go to market, right? And say, hey, you can use this protocol. It's better than this existing protocol that really has a lot of usage.
Yep.
And we grew this to, I'd say, probably $2 billion or something like this of dollars. So the point where it represents like a very large proportion of Aave and Compound itself, which has been considered, by them as a problem. We can talk about this later. But, frankly, it's never been the plan for us to grow this, because we knew we were limited just because we were building on top of Aave. We inherit the risk parameters. We inherit the lines of code, we inherit a bunch of things. And so we decided to build our own lending and borrowing protocol that's completely independent from Aave. That is called Morpho Blue. And Morpho Blue, really what it does is unbundling Aave into two pieces. Aave does, and Compound, they do two things. They do lending and borrowing, and they do risk management all in one. Mm-hmm. So when you go to Aave and you have some, USDC and you deposit your USDC, the Aave DAO, so the token holders of Aave, are going to risk manage this pool. So they're going to constantly change risk parameters by saying who is allowed to borrow your capital, right? And in practice, what does that mean? This means, okay, this collateral is accepted for a borrower. Like, borrower can borrow your capital with WBTC or with, Link or whatever token. And this is a very complex process. There is more than 700 parameters in Aave. And so the way Aave works is that token holders on a daily basis, they have to change those parameters, essentially, right? And token holders, frankly, could be anyone, right? Like, so in practice, there is like a delegation system, etc. But, you can't assume knowledge nor activity from a token holder, right? And so they hire consultants in order to change those risk parameters, but then you have a bunch of problems related to that as well. What Morpho does is just the lending and borrowing part. So there is no risk management aspect, right? There is the Morpho protocol is a completely immutable piece of code where anyone can deploy any lending market that they want under the risk parameters that they want. And once they're created, they're completely immutable. And then as a user, if I go to a specific market, And I have to do my own risk management, essentially. So I don't have a DAO that is going to manage it for me, right? And do the whole complex thing that we're talking about. So it has two advantages, like one obvious upside and one obvious downside. Like the obvious upside is that the protocol can be much more efficient, much more simple, because it's, it's just one very simple thing. And so it's completely immutable, much safer for different reasons. Like the Aave and Common protocol had like a lot of different incidents over the past years. And some lending protocols like Order, like got hacked hundreds of millions of dollars as well. And so Morpho Blue in itself is like a completely, the most secure, efficient, and, flexible lending market, primitive market, right? Now, as a user, you don't want to do your risk management, right? And so this is why we have a second layer, which is the Morpho Vault, where essentially anyone can rebuild the Aave experience where you get to deposit your funds and someone is going to essentially curate which markets you are getting exposed to. So it sort of recreates the risk profile that you have on Aave as a lender. Anyway, so essentially the idea here is that as a user, you are essentially interacting, either if you know how to do your risk management, you directly interact with a primitive, which does much less than Aave, but do it more efficiently and more securely. If you're a passive user, you go through the Morpho Vault layer, and you have a bunch of different vaults doing different risk profiles, etc., etc. And they're going to do the hard work for you, essentially. Right. And so it gives you the same experience as Aave, where it's like super passive, you generate yields, except now you have a tailored risk exposure. So on Aave, you have a one-size-fits-all risk profile. On Morpho, you have each vault that has a specific risk exposure. And you don't get to subscribe to the whole pack of like 30 different assets of collateral, which, some would say are becoming quite risky over time. If you want to be exposed to just two assets, and the most successful vault on Morpho, that's an interesting one, are only backed by very, very blue chip assets, immutable code, two collateral assets that, arguably one of the safest products in, the entire decentralized finance space. But you could also have much more risky things, right? So we have vaults in the Morpho Blue and ecosystem that, provide much higher APY than Aave, but are, having much higher risk, right? You could also have different compliance, right? Depending on, where you live, the legislation that is enforced in your country, you may not want to use one vault over another, right? And so the Morpho, infrastructure lets you sort of edit this, right? And configure what you need. And well, on Aave, again, it's a one-size-fits-all for risk, but also for compliance, where everybody is treated equal.
You mentioned the vault managers, the passive investors and passive lenders and borrowers of the protocol. What kind of companies do you see managing vaults today? And do you think in the future, one of these 50,000 banks will manage vaults one day?
Yeah, that's a very good question. So right now we have approximately 10 vault traders among the best risk experts in the space, right? Or DAOs, right? So what's interesting now, it's an open market. There is not, a single DAO that has exclusivity around risk management. Now anyone can do their own risk management, right? And so you, for example, have the Gauntlet that used to do risk management for Aave, and they decided to leave Aave for Morpho a few months ago to build their own vault, right? So Gauntlet has a bunch of different vaults with different risk flavors, and they can configure them how they like, etc. So that's one example. Another one is, for example, Stakehouse Financial. Stakehouse is doing both risk, but also real-world assets analysis. They have a huge expertise around real-world assets, and so they can provide a vault that is exposed to both crypto collateral and real-world asset collaterals, right? So, and provide a service that essentially gives you the best yield of traditional finance and decentralized finance. You have Maker. Maker is a DAO, and they're managing their own vault the same way, Aave is a DAO, and they're managing their role. Well, you have DAOs that are entirely, building their vault. And so you have a bunch of those. And eventually,
in that case, the DAO will votes for how to manage and parameter the Morpho vote.
Exactly. The same way Aave is doing, right? And Jubical. And this is what I like really about Morpho, is the incentive game is much healthier in the sense that now risk management is a free market, right? And so if the DAO model is the best model for a specific use case, then maybe users will eventually decide this. If there is like a centralized, regulated like entity, like a bank, as you were mentioning, that's going to build. If this is the winning thing, with like, then maybe, right? But we don't have any opinion on how risk management should be operated, right? So yeah, and the interesting thing is that all those different markets, they compose risk differently, they compose Morpho Blue markets differently, but they all share a common ground, which is Morpho Blue, right? So the Morpho Blue protocol is common to all those different metamorphables. And so if I'm Gauntlet or if I'm Steakhouse, if I do use some markets in common, I'll share liquidity to the extent that I share risk. Those vaults are not isolated, right? It's not like Gauntlet builds their vaults completely isolated from Steakhouse that builds their vaults. That would be more like TradFi, we again have like 50,000 different things. They build different instances, but they share a common market to the extent that they share risk.
Right.
That, unlocks additional efficiency and a bunch of things that are not possible in TradFi.
And you were mentioning RWAs, which is one of the assets that will be born or then on a protocol. Do you think, first of all, like, what is going to be Morpho Blue in 5 years in terms of like assets? What kind of asset do you think will be the most, swap, lended, borrowed? And do you think, because in case of real world assets, it means you have to do KYC. How do you approach this KYC DeFi? Do you think DeFi is going to be by design KYC at some point?
So I think we should be permission agnostic rather than, permissionless. I think there is a big confusion when people say, okay, something is permissionless. What does it mean? Does it mean that everybody's blended and, touching the same pool of capital? Aave is permissionless for users, right? But it's not permissionless in the sense that if you want to impose specific conditions on who can touch your capital, then you can't, right? On Morpho Blue, we're permissionless in the sense that not only, anyone can interact with any market if the market allows, certain conditions, right? So for example, permissionlessly, I can create any market with any access control that I want, right? So for example, if in one market I wanted, a specific KYC to be enforced because I'm obliged to because of my regulation, then I can, right? But at the protocol, we have no opinion about which regulation should be enforced. The same way HTTP or, does not have an opinion about the internet traffic flow that goes through HTTP, right? It's for the client, like the application, to essentially regulate and to apply its local regime depending on who is the end customer, right? So it's very interesting because in that sense, Morpho Blue is not positioning itself as a product that's directly mapping with the user, like Aave is, but it's much more of an infrastructure where you can think of it more as an internet protocol than it is to a financial product, essentially, or a decentralized financial product. So it's an internet protocol where anyone can impose its own gating system. And I'm expecting more and more of those, KYC applications just because, countries are imposing it, but I'm also envisioning a bunch of innovation in that space and how one KYC can be compatible with one another. How can you aggregate KYCs in such a way that's going to bring much more efficiency and liquidity to the space? Like, for example, if I do a KYC on an exchange, how can I reuse that in order to do something else, etc. So yeah,
or on one vault and the other one, right?
Exactly.
You don't want to do like two KYCs, supposing you now using two different markets from two different vault managers.
Exactly. In an ideal world, I have my Web3 identity words, and when I present myself to an interface, everything gets automatically filtered according to what I'm allowed to touch, right? And also according to my conditions. And then I have access to like everything, everybody that's, at least compatible with me, right? They don't have to be an exact match. They just have to fulfill at least my conditions. And I think this is such an interesting space. And I think also a huge business opportunity for companies building like in the, KYC tech. I don't know if that's even a word, but so it's, yeah.
Yep. And in terms of assets being, on the platform today, what are you seeing and what are you expecting to see in 5-10 years?
So right now, most users are just, as I was mentioning, high net worth individual that made a lot of money in crypto, or DeFi funds, right? That see the opportunity in the crypto yield, right?
Right.
It's mostly crypto yield. What I mean by crypto yield is yield that you can only get in crypto. Mm-hmm. Usually it's powered by two things, either artificial incentives, which are powered by high valuation of like investments, or by crypto.
So, for example, boost of APY from the protocol, right? And protocol tokens and
exactly. Okay. So usually what protocol do to bootstrap their protocol, and Morpho does this too, we distribute some tokens, right?
Right.
And those tokens are valued something because people expect the protocol to grow even more, right? Mm-hmm. And the second APY source is really like crypto leverage. So people that want to leverage on their crypto, it turns out this drives interest rates higher. And so this is really crypto native yields, but that's frankly a fairly small market opportunity. I mean, we're talking about, maybe $50 billion, right, in total.
Right.
That's tiny, like just as a comparison, daily over-collateralized lending markets in TradFi is like, tens of trillions of dollars, right? So it's just like several orders of magnitude away from what it could be, right? And so right now, very crypto focused, but obviously with the ambition of going much broader than this, which requires some profound changes in the way we think about DeFi, in our opinion. And not much I can share at the moment, but this is something we've been heavily, researching and working on over the last, 6 months.
So that maybe one day you have more real world assets. You have a part of TradFi that is actually moving to the Morpho Blue protocol, so that you can lend and borrow kind of easy, right? Okay. And I guess it's kind of a related question, but you can not forcing me to talk about DeFi and not forcing me to talk about Morpho, but how do you see the DeFi world in 5-10 years, and what you think is going to be the killer kind of app, right? All the ecosystem say, okay, stablecoin is going to be, the product that will give or make access crypto to billions of users, or it's decentralized social media or social platform. What do you think is going to be the killer app, and how the world
bio in
Web3 in general, and
Web3 in general?
Yeah.
So it's just like we have 5 major use cases with product market fit, or looking to have product market fit, which are markets, so like decentralized exchanges. So that's the market of Uniswap, stablecoins, which are like Maker, Frax, Angle, etc. You have lending. Right, lending and borrowing and credit in general is like a very fundamental primitive. Staking, which much better than I do, and social networks. To me, those are the 5 areas. I'm probably missing some, but to me, that's like the 5 areas with very clear product market fit. Right. As applications in DeFi, I mean, staking can be discussed if it's like an application or an infra, but I'm very bullish for socials in general. I think decentralized trust is more needed than ever in the world. And we have, with the Vault creators, for example, a need for that, right? Like, people know Gauntlet. It has a brand and it has a power, right? A Steakhouse is a bit less known than Gauntlet, but there are also an exceptional team. Block Analytica, same thing, right? First DAO, etc. Hour 7. And how, as a user, can I interact with something and in a trustless way know that it can be trusted, right? And if, for example, I have my Farcaster account, right, which is linked, which, has a social proof, some people are following, right? I have a social graph that's valuable because it has been growing for like, the last 5 years as a company. And I'm followed by all those people that I trust, right? And I can reuse the social graph and, as the Gauntlet Vault owner, or the Steakhouse Vault owner, I can say, hey, here is my social graph, right? And you can see, you can trust this vault, right? Essentially, if you don't want to do the hard work, etc. That's a stupid example, right? But I think eventually you're gonna get the idea that you can't do this with a Twitter API. Like, you can imagine doing this, but with the Twitter API. But then, okay, what if Twitter changes the API? First, it would break everything. Second, we're talking about trusting people with your money. And so you probably want a trustless system, etc. So that's just one tiny example of an extremely valuable thing that a social graph can do. And so I'm very, very bullish on this last one.
And you don't think these 5 product market fit use case will be disconnected from each other, right? You think they're going to very well interact with each other on the blockchain?
It feels to me that those are pretty fundamental. Maybe one or two, like in the DeFi space, can be merged with one another. For example, DEXs and lending have a lot in common if you go deeply into like the primitive. So I believe that, they will cooperate, but there will be very 5 clear winners about, those different, those different things. Just because in a decentralized world, they don't make so much sense to have 2 players, right? Because the whole point of decentralized system is that you can have a monopoly, which aggregates everything and hence is like super efficient. But then the problem is of a monopoly is trust. Like, you don't want a monopoly to handle all the world's money. A lot of this and trustless code, right?
That's right.
So I expect to have at least 5 major winners in each of those primitives.
That's interesting. Conscious of time.
Yeah.
You said that, you were working on something. So I hope you could come back on the podcast and maybe announce it in the future. But where can we follow you on Forecaster, Lens, Twitter, whatever?
So Morpho's handle is Morpho Labs, so MORPHOLABS. Mine is Paul Frambeau, so my first name and surname attached together. And on I think everywhere, like Lens, Forecaster, and Twitter. I'm not very active on Lens, but I am more active like on Forecaster and Twitter. And Morpho and Forecaster is just Morpho, MORPHO. I'm sure we have a bunch of interesting things to share over the next months or so.
Yeah, you're not too far, right? So you can still come back and work 15 minutes in your ex office. Thanks, Paul. It was a real pleasure to have you. And I hope to see you soon.
Likewise, thank you very much for having me.